I push painkillers for a living, actually, financial painkillers. There are solutions to the pains that you get in your back, and you need to get some financial painkillers. If you happen to be in the X-Gen or Boomer category, age 50 to age 80, these topics are a real pain in the back. Number one, taxes are a pain in the back. Right now, the rug was pulled out from retirees. We thought we would get into IRAs and 401ks, and someday later we'd be in a low tax bracket and get out for cheap, but it's not true. And in fact, IRAs and 401ks, they convert capital gains to ordinary income, and they're a big problem. So what's the big fix? There's a rush to do Roth conversions so that you can pay the tax at a rate you know today rather than some unknown rate, and also solve the big issues of high income taxes in retirement. Pain two, big pain for people that are 50 to 80 years old is IRMAA. Once you go on Social Security, if you have high income, you pay income-related Medicare adjustment. It kicks in at 65, whether you retire or not, when you go on Medicare. If you're working from 65 to 70, you're still paying IRMAA. The higher your taxable income, the more you pay. And this can be a lot. For a couple with substantial income, they could pay as much as $600 a month each, $1,200 a month. That's like $14,000 per year, which in retirement over 20 years, that's like 280 grand. Next, leaving your IRA to your children leaves them your tax bill. They want your money. They don't want your tax bill, especially when it's as much as a 40% tax hit and sometimes as much as 50, depending on the state that they live in. Why? Because they pay death taxes, inheritance taxes, and ordinary income taxes, and state taxes, and federal taxes. It's a lot. So we see a lot of children lose half of their inheritance. Next, if you're trying to fund your estate, and in a lot of states, you want to create a trust and you want to fund that trust, and you want that trust to hold money that's going to go to your kids and your grandkids and insulate it from problems. What is wrong with having a trust for your children and grandchildren? Nothing. It doesn't penalize them. It actually protects them. If you're going to fund your trust, here's the problem. It's very difficult in this day and age with the changes in the laws, Secure Act 1 and 2, to fund your trust with your IRA without subjecting it to 40% income taxes on the first $15,000 or more. This is nuts. In order to fix your estate funding, to reduce IRMAA, and to solve other income tax pains in the back, reach out to us. We'll give you the solutions on how you can use a Roth estate plan, a Roth income tax-free for life plan, a Roth inheritance plan to basically solve all of these tax pains. I'm Paul Morrow. This is Smart Financial Lifestyles. Share this channel with anybody that you know that's age 50 to 80. Also, leave us questions in the comments below. Staying on top of solving these financial painkillers. This is just part of the art of being smart.